Hi, I'm Linda Eedes, and this is an update on the Global Fund for the fourth quarter of 2017. So the fourth quarter was pretty much a repeat of the third quarter, and indeed almost sort of a continuation of a theme that we saw throughout the year last year. And that was really sort of a feeling that the global economy is going to be okay, that there is going to be synchronized growth amongst the developed economies, and the spillover effect of that onto the emerging markets through commodity prices rising and the likes was a very positive impact for emerging markets as well. I think what's very interesting is that the Global Fund performed very well. It was up 22% for the year and up just under 2% for the quarter in US dollar terms, which was similar to what the MSCI All Countries World Index was up for the year as well. But what's interesting is that, first of all, the Global Fund had about a third of the portfolio in cash. So it managed to keep up with the global index despite that. And then secondly, a lot of the stocks in our portfolio are very different to sort of the major themes that have driven global markets. So typically you've seen a lot of the technology stocks in particular, both in the US and as well as emerging markets, which have really kind of concentrated the sort of market performance in an upward direction. Our portfolio actually is very, very diversified across many geographies. It does still have some resources exposure, which has benefited from the uptick in commodity prices. The currency is actually held outside of the dollar, which has been very positive for the portfolio as well. Primarily held now in sterling and yen, which are both undervalued relative to the dollar. And across a wide array of industrial industries, some in the developed markets, some in emerging markets or have emerging market exposure, but a really quite nice mix of stocks, which is very different to the market index, which, as we know, is now in very seriously overvalued territory. Some of the stocks that fared particularly well in the portfolio over the last quarter were some of the financial stocks, such as Berkshire Hathaway, which of course is Warren Buffett's business. Of course, with rising yields in the United States and in other developed economies, that sort of seems to be the theme that's coming through, certainly from the central banks as well, particularly in the US. That's very positive for companies such as Berkshire Hathaway, which has quite a bit of insurance exposure. We also had Tesco has actually started to come through quite nicely. That business has been sort of in the midst of a turnaround for quite some time, and the share price seemed to sort of be lagging what the actual fundamentals of the business were, but that also started coming through in the third quarter and then continued into the fourth quarter as well. And then businesses such as INPEX and BP, which are obviously energy oriented, the oil producers, benefited from the oil price going above $60 during the quarter as well. So those were also a boost to the performance. Some of the businesses that didn't do so well in the portfolio in terms of the share price performance was, for instance, Next, which is a relatively new stock in the portfolio. They actually updated the market with a trading update to say that the sales towards the end of the year were lower than they would have liked. They blamed this on unseasonably warm weather, which saw a lot of people in the UK going to do other things besides shopping on the high street. But all in all, a very, very good year for the Global Fund, and indeed a very good 2 years for the Global Fund since that cycle has started to turn in favor of value investors. And in fact, the Global Fund in US dollar terms is up more than 50% since the start of 2016. And that is actually, if you compare that to the MSCI All Countries World Index, which has also delivered an astounding 40% over that time, you can see that despite the fact that the market does seem to be sort of surging ahead, if you look at the mix of our underlying portfolio, it really is offering something quite different, and thus we believe will be quite well positioned against any sort of pullbacks in the market at the overall level. Remembering, of course, that we still have quite a nice chunk of cash to put to use when the opportunities arise. We also, in the fourth quarter, added to some of our positions which pulled back a bit. In particular, I'm thinking of a business such as Croton, which is effectively the biggest private education group in the world, in fact, but it actually happens to be based in Brazil. We saw the share price moving back a bit, and we took the advantage to actually increase a little bit of exposure. Obviously, with a lot of share prices having moved up quite considerably over the quarter, you would expect us to be trimming back a little bit on many of those holdings, which is of course what we did. So you saw the equity portion of the portfolio falling slightly relative to the previous quarter, but with a very, very good mix of underlying quality businesses remaining in the portfolio. And so we continue to look for those kind of opportunities, good businesses which happen to be going through some sort of temporary phenomenon which has caused the price to be trading well below the fundamental worth of the business. Thank you.